Hello guys, welcome back to AWM FX. Good morning, good afternoon, good evening, or good night, no matter where you are. Hopefully you guys out there are doing great, earning a lot of money from the market, and of course, take care of your own health. All right, the COVID-19 has been rising again, so don't let it get affected to your life. All right, control your life. So do a simple recap on my previous episode, the episode 3, on the supply and demand movement. All right. So I will say this chapter or this episode is more likely will be more on the slide explaining about supply and demand before I go further into the QML, the question model level. So let's recap a bit on the supply zone. So there is the two type of movement for the supply zone and demand zone. So for the supply zone, it will be a rally base drop. All right, we call it RBD, and drop base drop over here. And of course, for the demand zone is a drop base rally. All right, and a rally base rally. Right. So this is the basic movement of a supply and demand zone. And of course, we always say that we always sell at supply zone and buy at demand zone. So next, of course, we have our definition of how to mark our supply zone and demand zone. All right. So this is for the supply zone, and of course, we have the way of marking our demand zone. Sorry for that. This is supposed to be at the open. All right, at the open of the price. This is at the open of price. Okay, now the most important, how do we trade the supply and demand zone? So we go with the supply zone first. So important is that on the supply zone, we know there is two types of movement. That is the rally based drop and drop based drop. So first we talk about rally based drop. So first we have a rally price, then there is a base, then there is a drop. So this is our supply zone. So likely when the price comes back to this area, right, in future, that will be a drop. This is how and where we should be catching the setup. All right, we will be catching our trade over here, right? It's not at the this drop, because this is the big movement, and we are catching the footstep. All right, with the footstep of the big banks. All right. So the second type is, of course, we have the drop, and then we have a rally, drop base. All right, drop base, and then drop again. So this is qualified as a supply zone. All right, this is a supply zone. So important is that always look to the left. All right, look at the behind, and if there is a lot of rejection, all right, from the top or from the bottom, it's either, this is just an example, right? Sometimes it might just from the bottom, sometimes it might just from the top. It does not matter. But if it is from the top and the bottom, both way, that will be excellent. So this is what we consider as a SSR, significant support and resistance. And when in future, when the price comes back to this area, likely the price will drop as a continuous trade, right? So this will be a reversal trade. This will be a continuous trade. All right, similar for demand zone, right? We have the drop, base, and rally. So we have our demand zone over here. So when the price comes back in the future, it will likely to bounce from this demand zone. Similarly, for the rally, base, rally, all right, the demand zone, look to the left and make sure that it's a SSR, right? So that when the price comes back to this area in future, it will rebound for a continuous trade. So this is the basic of how we will trading our supply and demand zone. Even though I'm giving you a lot of setups such as rally base, uh, sorry, resistance become support or support become resistance. Either we're talking about the QML setup, or maybe the in future we will have a lot like the ruler setup, or and a lot more. All right, I'll try to dig as much as possible into my mind all the setup that I can get, and then I give it to you. It's all based on this kind of movement. All right, just 4 kind of movement, and then 2 for supplies, 2 for demand is all this basic. But now we go to into another chapter. And by the way, this video I'll cut it a bit, how should I say, cut a bit short, because actually, in fact, I'm not really feeling very well right now. I have a very upset stomach, right? So I try my best to show you as much knowledge as possible for this video, all right? So important, how do we determine the strength of a zone? All right, it doesn't matter whether it's a supply or demand zone. How do we determine the strength of a zone? Because with this guidance, all right, this determination of the strength, you can know what is your risk level. Is it a high risk trade or is it a low risk trade? All right. So first of all right, we use the time base. All right, we are using the time base. So what do I mean by time base here is that, so example, we have here is that price moving up, and then in a quick time it moved down. So this is my supply zone. All right, similarly with demand zone, just flip it over. So this is a very, very nice catch. This is what we really want. All right. Then similarly, we have this kind of time base where the price move into a zone. All right, create a zone, but it does not take too long and does not take too short. All right. So this is still possible. All right, you still have a chance for some good trade over here. And of course, what we have here is that the price move into a very, very, very big range. All right, very, very big range. So it creates a, how should I say, it takes very, very long times to create a zone. So I won't consider going into this kind of trade, because that the risk is very, very high. All right. So example here is that the nice catch is that if you can see here that the price move down quickly and then move back up. So it creates a very nice demand zone at this green box over here. Similarly, if you look at this red box here, is a small one. It comes into this area and quickly create a supply zone right on top. And then when the price comes back, it reacts and then drop. So this is what we call as a nice catch. Nice catch. So the second one is that the price move, all right, into a range but not too long. So if you can see that the price move into a bigger range, the time frame it takes for the price to create a zone is higher, all right, a bigger, longer. So similar with this one, this is a demand zone and this supply zone. There is still possible of some nice trade, nice movement, right? So this is okay. So the next one, this is something that we try to avoid. All right, you can see that the price move in a very, very long time. It's a drop, base drop. This is a qualified drop, base drop. But the problem is that it takes very, 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 very long time, all right, to create a zone over here. So what happens is that the price likely to ignore the price and then move all the way. All right, so this is something that we will try to avoid. All right, so understand 3 types of time base. So second way of determining the strength of a zone is that by using the strength itself. All right, by using the strength itself. So the first one is that we have a price. All right, then suddenly there's a big drop. There's a big drop. So this is something that I'm loving it. I really like it. All right, it always create high chances, low risk, high return type of trade in future. So the second type is that similarly we will create a zone, but this time that it takes a smaller candle to break the zone. All right, it takes smaller candle. It looks similar, but just that the strength of the bearish over here is that it breaks into a few candles. Sometimes it may break into 4 or 5 candles. So you have to be cautious. You're still able to get some good trades out of it, but have to be cautious. So this is the type of strength that I will ignore all the way. All right. So what kind of rubbish is this? So you can see that it not only it does create a zone, but it takes very long time going up and down, up and down, up and down, up and down. So it's indecisive, means that there is a supply zone out there, but just that the strength of it is not strong, right? Not the thing that we want, right? So the example over here is that the strong zone. So we have a strong zone. You can see that the price drop, right? Nicely drop. So it creates a supply zone. So when the price comes back, it may react a few times, but eventually it drops, all right? So this is a very nice, good strength type of zone. So the second type is that over here, actually there's two examples. So example 1 and example 2. So if you look at 1, this is the type what we call as a strong zone. Strong zone means that the price comes over to this area and then it creates a very large surge, all right, bullish candle over here. So this is the type that we like the most, we love the most, all right. Very high chance it will give us a very, very good return, all right, and a high possibility that it will reverse. So the second type is, this is the one that there is still some chance, but just that you have to be cautious on how you're going to trade, how you're going to approach this kind of trade. So if you look at it, it took three candle to break the zone or to create this zone over here. So when it creates the zone, the price comes into this area and you still have a chance to make your trade, but just that sometimes it does ignore and then go a bit lower before it will reverse. All right, so I have to be cautious. So this is the type that we want to avoid. So you can see that this is a rally based rally, but just that the rally, the base over here is very, very messy. All right, I'm not talking about the Argentinian footballer Lionel Messi, but I'm talking about really, really messy type of trade. So you can see that the price tend to ignore the price, and then goes all the way and then get you stop out. All right, stop out before doing a continuous trade here. So this is a type of base that we want to avoid, right? This is a demand zone, but very, very ugly type of demand zone. Okay, so the third type of way we determine a strength is using the fresh base. All right, the fresh base. So fresh base is actually the easiest to understand. So first of all, similar what we have here is that we have a bullish candlestick and then a sudden bearish candlestick. So in future, there is no price has ever reached this area. All right, has reached this area and then test this zone. So this is considered a fresh base. All right, so this is I'm a virgin. All right, so it's a fresh base. So there's a high chance that you can take trades over here. So second type of base is that we have similar situation, but what happens is that there is some price reach this area before. All right, it reached this area, but it does not go through all the way. All right, it reached this area. It might looks like this, or might looks like this. All right, so this is still medium risk. However, it depends on each person. For me, myself, I won't trade. I won't take this kind of trade. All right, I will just take this one. But some people, they are more, their approach is more risky, or they are more, how should I say, suicidal. Then you might take this risk. All right, you might get some good trades out of it also. I won't say no. All right, of course, the third one that we try to avoid is this type. All right, so we have a similar situation, and in future, suddenly that is something we saw it like this. The price reach above the zone, all right, reach above the zone before the drop. All right, so this type of trade we will try to avoid. So sometimes it may looks like this, sometimes it may looks like this. So when the zone has been how should I say, has been tested or engulfed, so I'm not going to take any trade in this zone in the future. So you better run for your life. All right, so example over here. So if you can see that this zone, so before the price reach this area, this zone is very, very fresh. All right, so this price reached this area, tested this zone, and then it drops. Similar with this one. You see, so before that, there is nothing. It is fresh all the way. until this price reach this area before it drops again. So this is a very nice supply zone. All right. So the second type is this one. So you can see that at this zone over here, the price did comes back and tested it, but with a very, very minimum touch on it. So some people may consider it as a fresh zone. Some people may consider as a non-fresh zone. It depends your perspective. All right. So future, the price comes back to this area. It reach deeper. All right. Before it drops. All right. Before it drops, it reach very, very, very deep over here. So this is for those who are willing to take higher risk. I mean, eager to go into trades, which I don't. Sorry for that. Which I don't recommend. You might consider this kind of trade. All right, you might consider this kind of trade. So the last one, things that I tend to avoid. So example, we have a zone over here. So what happened is that the price violated, all right, violated, tested, and then not only that, the price reached above, all right, above this zone, all right, yes, violated this zone. So means that in future, all right, the price will likely ignore, all right, it will likely to ignore and goes as it is. So these are the three type of zone, right? The one that I like, the one that with medium risk, and then the one with the extremely high risk type of zone. So you have to know your zone well. So now we go into things how we're gonna trade a supply zone in a QML. So what is a QML? I'm gonna have a next chapter. All right, next episode I'm gonna explain it more in detail. What is a QML, the Quasimodo level? So this is just a brief. All right, just to tell you, this is a brief introduction onto what is a QML. So what we have here is that the price is moving high, low, high. This is what we call as a bullish movement. All right, bullish movement. So what happened was that the price suddenly drops. All right, drops beyond the previous low over here. All right, drops beyond the previous low. Then on the way, when it drops, it creates something very, very nice over here. So what it happens is that this line is what we call as a QML, Quasimodo level. Of course, different people will trade QML differently, right? Similarly, if I give you a MA, the one called a moving average, everyone will trade it differently. So I cannot say who is right, who is wrong. It's just that what I'm trading, I'm gonna explain it. I'm gonna share it with you guys. So QML to me is not important, but QML to me is just a signal, all right, that the price is likely to reverse. All right, sometimes it might be reversed. Sometimes in a bigger picture, all right, bigger picture, it is a downtrend, and then suddenly it creates this QML, meaning that it will continue going for a downtrend again. So what happens is that we're going to determine our decision point, which I'm going to explain further in, I think, few more chapters. And this is our supply zone. Likely, this will be our supply zone. So when the price comes back future, it will drop. All right, it will drop, and then it will create. All right, this is just illustration. It is sometimes it is not so perfect. So when it drops, it might create another drop-based drop over here. Can you see it? Drop-based drop. And then what happens is that there is a resistance. Maybe at the back, there might be SSR. And this is our new supply zone. And the price comes back and then continue dropping all the way. So the tips here is always look to the left. All right, you have to know what happens before. All right, then you have to find your significant support and resistance. So it's very important. So third is the enter at the decision point. This is our decision point, and TP at the next fresh demand zone. So how you're gonna read your demand zone is you have to practice seeing the doing a lot of practice on the mapping that I've shared before previous chapter. So of course, the safest entry is always follow trend, sell, find supply zone, and then that breaks the significant support resistance. This is a very, very important statement over here. always find the supply zone that break the significant support resistance. This is a keyword here. Find the supply zone that breaks the significant support resistance. So every time when you trade, if you do not know where is your decision point, you don't know where's your MPL, maximum pain level, or whatever it is, always find something that drop base drop, right? Or rally base rally that suddenly break a very how should I say, a uh, very obvious significant support and resistance where the price tested many times. So in future, that is your entry point, right? So this is how we trade supply zone in the QML. And then similarly, we have our sorry, this should be a demand zone. I've made a mistake here, pardon. So this is how to trade a demand zone. Sorry for that typing error. So when the price is going downwards, all right, this is a bearish movement. Similarly, high, low, lower high, lower low, lower high, lower low, lower high, lower low. So we consider this as a head. And the price moved beyond the previous high over here. This is considered a QML for a buy. Right? This is a demand zone. So where is our demand zone? The first demand zone will be likely over here. So when the price comes back to this area, when you reach this area, it will rebound. Right? It will rebound. So when it rebound and then it breaks this another resistance over here, it creates another zone. So this will be our new fresh demand zone. All right, so the price will likely to come back and then retest. Similarly, the tips is the same. Always look to the left, find your significant support and resistance, and entry at your decision point, right? And TP at the next fresh supply zone. And of course, the safest trade is to follow a trend where you find the demand zone that breaks the significant support and resistance over here. All right, so I'm going to cut short this video. So this is a bit of another introduction on how to trade supply and demand zone on QML. Of course, I will explain to you the strength, right? The strength of a supply and demand zone, which you should be trading, which you should be avoiding. All right. So if you guys like the videos or like this small mini course that I've done for you, please do give me a like and of course subscribe to the channel, and so that more people will get to know about the channel. All right. Then of course, one thing, remember to hit the like button, the bell button, something like that. So when I upload the next episode, which will be on Thursday, all right, on Thursday, I'm gonna go deep into QML. All right, that is the starting of the QML. So I apologize here because I need to cut short the video. As I told you before, I'm not feeling well today. But anyhow, I'm gonna see you guys. I'm gonna upload the video on next Thursday. So see you guys. Stay safe. Bye.